Hey there, guys. It's Gandalf here for another weekly market update. It's been about a week and a half since I've done an update. I think the last one was on the 6th of June. So we've got lots of price action to analyze, and let's take a look at what I spoke about last time and see what happened in between and see what I'm thinking for the next week or so in the markets. So I'll be focused mainly on stock indices and crypto. So let's start out with stock. So I think NQ is probably a good place to start. Last time I spoke was 6th of June, so it was around here. And what I told you was likely going to happen. This area here looked like a potential short area. So we made a peak here. We made another peak here. We looked pretty bearish here. We made an impulse to the downside, found some support. And this looked like the GP of this impulse down looked like a good place to short. So a lot of shorts probably came in here. But on the Friday, on the 4th of June, we had this bullish engulfing candle, which was a signal to me that it was very likely that we were going to push through this short zone and likely make another all-time high. And that's exactly what happened. We made another all-time high. But again, we're finding sellers. We've got this resistant trend line here. And we're finding sellers at these prices up here. And I think there's quite a lot of supply up here. And this is, again, a potential area to trade short. It's exactly what I did, actually. On the open on Friday, I did purchase some July puts, which are nicely in profit now. Actually, by the end of the day, we had some weakness and we closed at the lows. So I have a bearish kind of view here. I still don't think, I think I'm bearish here because there's risk reward, right? There's this resistant trend line. We've got an easy stop above this trend line. And there's, quite a long way to go to support. So it's a pretty nice short from a risk reward point of view. And that's what I'd say. I don't think price is bearish right now. I don't think. I mean, we had a bearish day on Friday, but when we look at the indices, sure, we made a higher high here, but we have not made a lower low. This is crucial support around 4,025. We have not made a lower low, and on NQ, I mean, we haven't even dropped Thursday's candle yet, so that I wouldn't get too over excited about the bearish potential. I do think there is bearish potential. You look at ES, that was a pretty significant candle, closed at the lows underneath the 50-day moving average. That's pretty bearish. NQ doesn't look anywhere near as bearish. The Russell 2000, however, tried to make a push for an all-time high, failed, and we went back into this kind of wide range. And I wouldn't be surprised if the Russell went back to this wide range, maybe test this long-term support here around the 2,100 mark. So while I think it's from a risk reward perspective, it made sense to short up here, and I will be taking some profits when we get to supports. So this trend line down here for NQ, back to this kind of support area around 4,000 for ES. I'd be looking to take some profits on any downside movements, and I'd be pretty cautious. This has been a difficult market to be a bear. Nothing suggests that that's going to change. But look, I think if we do break a support, so what I'm talking about here in terms of support, this area here, 13,000 on NQ, on ES, 4,000 on the Russell. If we break this zone here, 2,100 level, there's some pretty significant downside. On ES, I'm looking at 3,500, which is a pretty sizable move to the downside. If we look percentage wise, we're talking a good 15% drop on ES potential. If we go back to even this support here on NQ, that's still a 13% drop, and there's similar drawdowns in the Russell. So we're talking a pretty decent sized correction potential here that could occur. I think there's good fundamental reasoning as well. We had the Fed meeting uh, last week where they talked about inflation, concerns about inflation, about potentially having a first rate hike in 2000 towards the end of 2022, and we're not only talking a year away, which and usually the market is looking a year ahead. So I wouldn't be surprised at this point if there were some smart money, big funds that decided to take some risk off the table, and I think it makes sense, and that's what I think could be the narrative behind a decent sized correction here. So I've got my position. I actually took Q's puts. Hit the. I was looking at this area to short anyway, so it was a nice entry that I got on the open on Friday. So I am in Q short, and I'm going to try ride this. I'll keep some going in case we get moved down to 11,000. Say, I'll probably take some off on the first support area here that we hit. So I have got a bearish view for next week. I'm not under any. I'm not getting too overexcited on the bearish side. This market, just look at it. You could have got excited about being bearish at any of this point, and you would have got screwed. So don't get too happy about being a bear. It's not been a good market for a bear, but look, there is, we dipped below that kind of support trend line as well and closed below it. So there's some definite early bearish signs. The Monday open will be telling. If we gap lower and we open on Monday and we go straight and have a 1, 2, 3% down move again on Monday, I think that's going to be telling, and you'll start to see some more momentum to the downside. So stay cautious this week is what I would definitely recommend. I do think early signs were that the value stocks, so energy sector, industrials, those really had really strong momentum moves to the downside on Friday and Thursday. I do expect technology to catch up to the downside. So if you look at technology, what you kind of see happen initially is that funds move to defensive areas of the market, which is technology first. That's where they put their money as a safer haven versus some of these more riskier cyclical names. So that's what you've seen happen. I do think technology catches up to the downside though, and I do think the move or the commentary that the Fed is making and potential of the next couple years, I think is going to be bad for technology, and especially high growth technology. So while that's not playing out right now, I do think the XLK and some of the high growth technology names will suffer a little bit. So that's what I think. I will be creating a list, I think, over the next week or two of names, stocks that I want to buy the dip on. And some of them will be energy names. Some of them will be industrial names that I have weak exposure to. So I've been waiting for a big dip to get in, and I think this is the time that we can get in. So have your list of stocks that you want to buy or leap or whatever. I think we might be able to get some good potential entries in stocks, and I'm really hoping we get this move lower. I mean, I have a long-term portfolio, so it's going to be painful, but when I'm thinking about the long term, I'm talking about 5 years ahead. So blips like this really don't matter much to me in terms of a 5-year horizon. So I'm excited for a dip. We'll see if it happens, and Monday will be pretty crucial to see what happens. Let's take a look at Bitcoin. So Bitcoin has been in this range. So I think over the last, this has been going on now. We've been in this range structure for a month. So I did predict this range structure to appear. Maybe it's gone a little bit longer than I would have thought. So between this green zone here, around 42K, and this green zone here, 30K, a range to appear. We squeezed the range into this, and for a little while it was this kind of triangle structure here that was appearing. And this is a pretty typical result of a triangle structure, that you end up basically screwing over both bears and bulls of a triangle. So we broke down here to the downside, immediately screwed up any bears, got right back to the top of the range. People got bullish, and then we screwed the bulls as well. And now we're back into the medium of the range again. So the fact that we dipped this far doesn't look good. I still maintain my bullish view on crypto and Bitcoin. What does concern me is if we do get this huge down movement in technology stocks, in stocks as a whole, we're talking 10-15%. I don't think Bitcoin is going to escape that completely unscathed. So look, I don't know what's going to happen here. Maybe we consolidate around here for a little while, we liquidate, and then we bounce, and we trap again some bears down here, and this will be some sort of a wick-off type pattern structure that might appear. So yeah, I think that probably is the most likely. If they do have a downside movement, that's probably more likely. If stocks continue just grinding higher, then I think it's quite likely we head back to the top of the range and we start to break some resistances. So I think if you're buying and holding crypto, which I am, so Bitcoin, Ethereum, some alts as well. I've got more than this, but some a kind of portfolio of altcoins, and you're not using leverage, I think you're totally fine. Look, I don't think we're gonna, there's some people expecting us to go straight to 20k, bounce, and then maybe head down to 12k, and then basically exactly what happened in 2018. They're expecting the same thing to happen. I don't think that's the case, because I don't think this was a bubble. This isn't a bubble price movement. We didn't have a mega blow off top where all things pointed to the moon. We just trended higher. So this is not a bubble, and I'm not expecting a crash to appear here in Bitcoin. This is just a deep correction, and you could call it a bear market. I mean, we're down 50% from the highs, and that technically is a bear market. But I don't think this is going to be a crashing type bear market. It's a little bit painful, and even this range is painful for people trying to buy. They're trying to buy breakouts, and they're getting screwed, and it goes back to the bottom of the range. They try to break out the bearish area, and then it goes back to the top of that range. It's probably pretty brutal to day traders. So just be cautious. I think just pick up entries at any time we get to this green zone. I think you can look to buy. Don't try not to buy with leverage, not a lot of leverage, 1.5 leverage max, I would say, because look, we could get a liquidation spike again. I won't be surprised, and you want to make sure you're able to keep cash and buy when we get to some really nice, interesting prices. And you also don't want to get liquidated if we do, say, an altcoin like Solana dips 50% and you're 2x leverage, they wick your liquidation, and then it skyrockets higher. It's an awful feeling, and it's just not worth that additional bit of leverage to take that risk, frankly, in crypto. So I still maintain my bullish stance. I did think that this move higher was telling. I thought we broke some resistance there. I was expecting some accumulation and a move higher, but the fact that we dipped back to the bottom of the range means that it's not over. It's not over for the bears, and it's still an area of concern for the bulls. So I think we just have to wait and continue to watch Bitcoin to give us some more clues. Like I said, this is the area to buy. Don't buy up here, buy down here, and just wait for the breakout, and let's see what happens. And Ethereum is more tilted to the downside. This is just really strong support at 2000. Again, this is the area to buy. 200-day moving average is just below. And just if you buy here, then you can kind of relax and see what happens up here. So yeah, just wait and see with crypto. I think we need some more clues. Stocks look like they're geared for a downside movement, but stay cautious. And that's it. That's the end of the update for this week. Thanks, and I'll speak to you guys next week.